Okay, so like I said, you should in your trading plan. These are the components of a trading plan. Your strategy, that's your entry and your exit rules, should be stated in your trading plan. The market session you will be trading, Asian, London, or New York. I advise that you stick to London and New York session. Okay, because those are the most volatile session. Then your trading style. Are you a technical trader or a fundamental trader? That should be included in your trading plan. Then what time frame would you be trading? It's very important that you know the time frame that suits your personality. If you have a day job or you have a business that demands for your time during the day, you shouldn't be trading 5 minutes, 1 minute, 15 minutes time frame. I would recommend the daily 4-hour and 1-hour time frame. You must learn to analyze the market using multiple time frames. Okay, it's very important. So state the time frame you will be trading. Then the financial instruments you will be trading. These are the 4 instruments that I'm trading at the moment. These are my preferred instruments at the moment: GBP USD, GBP JPY, Australian dollar USD, and Euro Aussie. Okay. Then your risk and money management. If you're trading with my strategy, your risk on currency pairs should be between 50 and 60 pips. That is the market risk. You shouldn't exceed 50 or maximum of 60 pips. Then the capital risk, never risk more than 2% of your capital. Okay. Now, for those of you who will be trading with $100, you would have to take a risk of 5% if you're trading my strategy, which is 50 pips minimum. And the minimum lot size you can apply will be 0.01. So if you multiply 0.01 times 50, that will be $5. So you'll be taking a risk of 5% on your $100. Okay. Then trade management, very important. Very important. Okay. It's not about executing the trade. After executing the trade, you need to manage the trade. Okay, you need to manage the trade. So you should have trailing stop strategy. Okay, and also scaling in and out of a trade should be one of the techniques you apply in managing your trades. Okay. So all this should be included in your trading plan. Okay, so like I said, I'll be sharing my trading strategy with you guys. Most of you already know my trading strategy. Okay, but I'm going to repeat that tonight. Now, why am I doing this? For those who wouldn't be joining the community, you have access to this strategy. We'll be trading in the community. Okay, for those who can't afford to join the community, just to give you access to the trading strategy so that you can just do your thing. Okay, so the first thing I look out for as a trader, you need to know the trend of the market, right? That's the first thing you need to identify on the chart. Okay, the purpose of the chart is to analyze the market. And the purpose of analyzing the market is to know the trend of the market. So the first thing I look out for on the charts . Can you hear me now? Sorry for
Yes,
that break. It's
yes.
due to poor network. Okay. Okay, so let's move on. So the first thing I look out for is the candlestick pattern on the higher time frame. Okay. The first thing I look out for is the candlestick pattern on the higher time frame. Now I'll use the weekly and the daily as my higher time frame. Okay. I use the weekly to define the trend for the week, and I use the daily to define the trend for the day. Okay, so I start by looking at the weekly time frame. Now let's go to the chart. Let me work with GBP USD. So the first thing I look out for is the candlestick pattern on the weekly time frame. I need to know the trend for the week. Okay, I need to know the trend for the week. Okay, so let's start with the weekly time frame here. So you can see last week candle was strongly bearish. Can you see that? And it broke out from the support. So going by the pattern we have on the weekly time frame, GBP USD is bearish at the moment. Based on the pattern we have on the higher time frame, which is the weekly time frame, GBP USD is bearish. Now the next thing I'll do is go down to the next lower time frame. Now, if you look at what we have here on the weekly time frame, you would also agree with me that GBP USD on the weekly time frame is at a discount area. If we are to work with this previous range, GBP USD is what? At a discount area. And on the higher time frame, the pattern we have here is not a bullish reversal pattern. Okay. Now let's go down to daily. What do we have on the daily? Okay, this is what we have on a daily time frame. So what pattern do we have on a daily time frame? Can we identify a bullish reversal pattern on a daily time frame? There is no bullish reversal pattern on daily time frame, right? Last Friday candle closed as a bullish candle, but this is not a bullish reversal pattern. Now, after identifying this on a daily time frame, now one thing I want to confirm is that the weekly and the daily time frame are in agreement. If the weekly is bullish, daily also should be bullish. Are you following? The daily also should be bullish. Now let's go down to 4 hour. So if you look at what we have here on 4 hour, at this point, we had a spinning bottom that formed after this bearish candle. So this would have been a good entry for GU last week. GU buy. After the formation of this spinning bottom, this would have been a good entry for GBP USD. Okay. Now, after confirming the pattern on the weekly and daily time frame, we need to ensure that the structure, you can see, after identifying the candlestick pattern, the next thing to identify is the structure on a lower time frame. You could work with 15 minutes time frame. If you are not experienced, work with the 15 minutes time frame. If you're an experienced trader, you can work with 5 minutes or 1 minute time frame. What are you identifying on the lower time frames? 15, 5, or 1 minute time frame. There has to be a shift in market structure on those time frames. I hope you're following. There has to be a shift in market structure on lower time frames. So let's go down to 15 minutes. Let's say the pattern on 15 minutes or structure, sorry, structure on 15 minutes. Is it updated? Okay, it's updated. Okay. So can we say there is a shift in market structure on 15 minutes? Can we say there's a shift in market structure on the 15 minutes time frame? Is there a shift in market structure for those of you who trade market structure? Is there a shift in market structure on 15 minutes time frame? There is no shift in market structure on 15 minutes time frame. Okay. Victory, there is no shift in market structure on 15 minutes time frame. This is the most recent lower high. And for a shift in market structure to occur, the most recent high must be cleared. It must be cleared. Okay, it must be broken. That is, a body of a candlestick must close above that lower high, which is this. So this is where the shift in market structure would occur. So at the moment, GBP USD is not set for buy. Are you following? GBP USD is not set for buy. Remember I said on the weekly, there's a breakout from support, which indicates that the trend on the weekly time frame is still bearish. But at the same time, the market or price is currently at a discount area on the weekly time frame. And since price at a discount area on the weekly time frame, there's a possibility for price to pull back to fill a fair value gap or pull back to test the, what's it called? The support, which has become a resistance. So price is likely going to pull back. Okay. Price is likely going to pull back to this area. It's a probability. It's not guarantee. Okay. It's probability. Price is likely going to pull back to this broken support stone resistance before going bearish. Let's go down to daily. Let's see what we have on a daily. So on a daily also, or let me use 4 hour. Okay, so you can see on 4 hour time frame, there is a fair value gap here. You can see market structure, then we have fair value gap. Can you see that fair value gap? So on 4 hour, you can see there was a fair value gap that was created here. Right? The fair value gap was created here, and there's a possibility for price to pull back to this area before GU continue with its bearish move. So if there's a possibility for price to pull back to that area and you decide to buy from the current market price, what are the things you should consider? The risk involved. Like I said, this would have been the best entry for buy on GU. So if you want to take a buy from the current market price, calculate the risk. Your stop loss will be at this level. This is about 65 pips. This is about 66 pips. And your profit target, this is about 90 pips. Does that risk reward make sense?
No.
The risk is worth it, right? It's worth it. This is like 1:1.5 risk reward. So it's okay. This risk reward makes sense. 1:1.5. That should be your first TP on any trade you execute. First TP should be 1:1.5. Other TPs could be set at 1:2 or 1:3. So this is still a good risk reward for TP1. Okay. But if you had entered buy from this point, your stop loss will be, let's say, 30 pips, and you are targeting this. This is like 1:5 or 1:4 risk reward. So if I'm to take a buy, if I'm to risk buying on GBP I'd want to see price pull back to this level before buying. But my bias for GBP based on the weekly pattern, and we just entered a new month. So it's also important that you look at the monthly time frame also. Okay. So we just entered a new month, and what do we have on the monthly time frame? You can see GBP has been bearish for the past 4 months. And on the monthly time frame also broke out from a support level. Can you see this? It's trading below this support level. So on the monthly, GBP is bearish. On the weekly, it is bearish. Daily, bullish. 4-hour, bullish. 1-hour, bullish. But the fact that 15 minutes is yet to shift, the fact that shifting market structure is yet to occur on 15 minutes, we cannot jump in and start buying because shifting market structure hasn't occurred on 15 minutes time frame. I hope you are following. Let's look at another instrument. Let's see GJ. So we'll start with the weekly time frame. So what do we have on the weekly time frame on GJ? GJ created a resistance level last week. It created a resistance zone last week. You can see last week candle was strongly bearish. What can you also see on the weekly time frame? What can you see on the weekly time frame? Now, what structure do we have on the weekly time frame? We had a low here. We had a high. Price pulled back, respected this previous low. So this became higher low, right? Then this previous, what's it called? High was cleared, right? Formed a new high. This is an higher high. Pulled back, respected this previous low. This became the most recent higher low. So the structure we have here on the weekly time frame is a bullish structure, right? Now, what played out last week? Now you can see that there was a rejection. That price filled this fair value gap on a weekly time frame. You can see there was a rejection after this gap got filled. And also on GJ, we still had the fair value gap here. There's still a fair value gap here that is yet to be filled. You can see this also is yet to be filled. Now, after the formation of this, of last week candle, let's go down to daily. I think the pattern we have on GJ is similar to what we have on GU. Okay, so let's go down to daily. I want to see a bullish reversal pattern on the daily time frame. So what do we have on the daily time frame? Can we identify a bullish reversal pattern on the daily time frame? Okay, so like I said, what we have here is similar to what we saw on GU. So last Friday candle just closed as a bullish candle. Let's go down to 4 hour. So what pattern do we have here? This is a bullish reversal pattern. Is this a bullish reversal pattern? Okay, so let's go down to 4 hour, 1 hour to identify a structure. Let's go down to 1 hour. Let's see. And let's see 15 minutes. There's shifting market structure on 15 minutes time frame. Do we have a shifting market structure on 15 minutes time frame? Is there a shifting market structure? You can see the pattern we have on GJ is similar to what we saw on GU. So on GJ, there is no shifting market structure on GJ yet. Shifting market structure on GJ should occur after this most recent lower high gets cleared. It's at this point we would say there's a shift in market structure. Okay. So my bias for GJ this coming week is bullish. Okay. This coming week, my bias for GJ is bullish, but I need to wait for this shift in market structure to occur before I would buy. Let's go down to 5 minutes. Let's go down to 5 minutes. Now, the reason I wouldn't wait for this 15 minutes time frame, if you calculate the risk involved, let's say from this point, because if I wait for price to clear this lower high before buying, you can see price would have, the risk I would take on this trade would be as high as 300 pips, because this is where I would have to set my stop loss. So the risk will be as high as 300, and I'm not willing to take such risk. Okay, I'm not willing to take such risk. Now let's go down to, there's no shift in market structure on 15 minutes time frame. Let's go down to 5 minutes. I want to ensure that the difference between the high, okay, and the low of that range does not exceed 50 pips. Are you getting me? I want to ensure that the difference between the high and the low of that range, which is this is the range I'm working with, must not exceed 50 pips, maximum 60 pips. I hope you're getting me. Maximum 50 pips. So that's the reason I would have to go to, let's say 5 minutes. Okay, so this is 5 minutes. Let's see the difference from this point to this point. Still very high. This is 163 pips. Still better. Okay, but it still is more than the risk I'm willing to take on a trade. So let's go down to, let's see 1 minute. Okay. So on 1 minute, this is the most recent lower high on 1 minute. So what's the difference from this high to this low? You can see this. So this is what I would have worked with on GJ. This is 60 pips, which is still okay. You can see the range is 60 pips. So immediately 1 hour candle closes above this high. That is when I would execute the trade, or I would have executed the trade. So let's see. Let me use this. Okay, a few minutes. So buy entry for GJ this past week would have been, I think it was on Friday, but so let's go to 1 hour. So after I've identified the most recent lower high on 1 minute time frame. All I'll look out for is for 1 hour candle to close above that high on the most recent lower high on 5 minutes. Oh, so sorry, this is 1 minute. Okay, so let's see. 1 hour candle. Okay, so this is 1 hour. No, sorry. Let me switch to 1 hour. Okay. So on 1 hour, this is what we have on 1 hour. You can see. So this would have been the entry for GJ. This would have been the entry. You can see this 1 hour candle closed above. Okay, so let's calculate the risk here. If I had executed the trade, let's see. If I'm taking this trade from this point, what is the risk involved? This is too high. This is 90 pips. So I would have waited for price to pull back. I don't want to risk more than 60 pips. I would have waited for this pullback. Okay, I would have waited for this back. Let's see, from this point to this point, you can see. So I would have waited for this pullback to occur. So when the risk involved is more than 60 pips, I wait for price to pull back. As we have it here, you can see when the 1 hour candle closed above this high, the most recent lower high we identified on 1 minute, you can see the risk. If I executed from that point, this will be about 90 pips. I wouldn't execute trade. Though 1 hour candle has closed above the most recent lower high, I wouldn't buy because the risk involved on this trade is 90 pips. I don't want to risk more than 60 pips. So I would wait for price to pull back. Okay, so this would have been my entry. Then my stop loss would have been here. And at the moment, I would have made, you can see, 75 pips. You can see, I would have made a profit of 75 pips. And my SL, at this point, I would adjust my SL to this level, which is my entry, or a few pips below this level, depending on how volatile the market is. Most of you do adjust your stop loss. You do trail your stop loss when the market is going in direction. But you also need to consider how volatile the market is. A lot of people will complain that immediately I adjust my stop loss to break even, market pulls back, hits my SL and start going in my direction. That's because you didn't take note of the volatility at that time. And that is why the market pulls back, hits your SL. Or probably maybe a major news was being expected. You didn't take note of that. Are you getting me? So I would have adjusted my SL to this area now with the hope that the market would, the shift in market structure on 15 minutes would occur. So I could set my TP using the most recent lower high on 15 minutes time frame. I hope you're getting me. I would have used the most recent lower high on 5 minutes, which we identified on 5 minutes. I would have used that as my TP, and the risk reward in that case would be as high as 1:5 or 1:6, right? Because from where I entered the trade to that level is about 300 pips. And since I'm risking 60, aiming for 300 pips, that's like 1:5 risk reward. Are you still here? So those are the things I look out for before executing a trade. The candlestick pattern on a higher time frame. If you want to be trading daily, use the daily time frame as your weekly time frame. You can decide not to work with the weekly time frame. Your focus will just be on the daily. What is the candlestick pattern that formed on a daily time frame? You use that to predict the next day trend. Okay, just focus on the daily time frame. Okay. Then market structure. I believe all of you here know how to identify market structure. If you don't know how to identify market structure, join the community. We'll teach you all that. when you join the community. Then liquidity. I believe you all understand the concept of liquidity. Okay, I believe you all understand the concept of liquidity. Liquidity resides at previous highs and previous lows. Okay, so most times I also ensure that liquidity has been cleared on 4-hour time frame, daily or weekly time frame before buying or selling that instrument. For example, if we go to the, let's see you, let's go to 4-hour. Daily. Okay, so you can see on a daily time frame, you can see we had previous low here, which was an area of liquidity. And last Thursday, that liquidity was cleared. So for example, if I wanted to buy GBP USD, I would have waited for this liquidity to be cleared before looking for a bullish reversal pattern to buy GU. If this low was not cleared, I would not buy. I wouldn't have bought GU until this low got cleared. It is after this low gets cleared, that's when I'll be looking for buy opportunity or bullish reversal pattern, just as we have it here. Can you see this? Liquidity was residing at this point. This was a previous high. Can you see this? This was a previous high. Liquidity was residing at this high. So if my bias is to sell GBP USD, I would have waited for this liquidity to be cleared. And after the liquidity gets cleared, I'll look out for a bearish reversal pattern. So it is after the formation of this bearish reversal pattern, this is a shooting star. It is after the formation of this bearish reversal pattern, I would sell. So I also ensure that liquidity gets cleared. It could be on 4-hour, it could be on daily or the weekly time frame. Are you with me? What else do I look out for? Okay, discount and premium. As you all know, we buy at discount and we sell at premium. Discount is oversold level. Premium is overbought level. When price is at discount, people want to buy. When price is at premium, premium means it's high, it's expensive. Okay, people want to sell at premium. And what tool do I use to identify premium and discount area? Fibonacci tool. I believe you all know how to apply the Fibonacci tool. You can also use, what's it called? Stochastic indicator to identify overbought or oversold levels. Okay, so these are the tools, price action tools that I use for market analysis. And what session do I trade? London, New York. Sometimes I trade Asian session. Sometimes, okay? And when I'm trading the Asian session, I ensure that my risk is less. I don't risk much if I'm executing trade in Asian session. Okay, if I'm to risk 2% on a trade, if I'm trading the Asian session, I risk 1% or less. Okay, I risk 1% or less if I'm trading the Asian session. As you all know, I'm a technical trader, okay? And the time frame I work with is the weekly, daily, 4-hour, 15 minutes time frame. I work with almost all the time frame, okay? But in defining the trend of the market, I use the weekly and the daily. Then I go down to lower time frame to look for good entry levels because that helps to reduce the risk on the trade. I'm not a swing trader. I'm a day trader. So I need to work with those lower time frame for better entry. Okay. Any questions so far? Do you have any question? Any question? Any question? I hope this is not too complicated. I'm not seeing your response. Are you still here? I hope I've not been talking to myself. Can you guys hear me? Any question?
Yes,
Any
yes,
question? Do you
yes.
have any question? Do you have any question? Let me know. Let me know. If you have any question, let me know. Okay, let's look at more. Let me go back to GBP USD. Let's do some back testing. Okay, Mr. Mark, in a few minutes. I will unmute you in a few minutes. Let's do a back test. So after the close of this candle on a daily time frame, this is a spinning top. Okay, this is a spinning top. On the weekly time frame, you would also notice that price filled this fair value gap. Because normally, after the formation of this spinning top on the weekly time frame, one would have waited for this next candle to close. So it means the next week that followed after the formation of this spinning top, you wouldn't trade. You wouldn't trade. It's the week that followed this bearish candle. That's when you would execute a sell trade. But as you can see, the market has already moved. So after the formation of this spinning top, the reason I wouldn't wait for the next candle to close is that one, price filled a fair value gap. And after price filled that gap, what formed? A bearish reversal pattern. If you also go back here, you can see we had a support which became a resistance. Okay, so after the formation of this bearish reversal pattern, I would go down to daily. What do I want to confirm on the daily? I want to confirm that the pattern we have on a daily is a bearish reversal pattern. It has to be a bearish reversal pattern, okay, on a daily time frame. So let's go down to daily. Okay, this is it on the daily. So what pattern do we have here on the daily? What pattern is this? This is a shooting star. Right? This is a shooting star candlestick pattern. So on daily and weekly, the pattern is bearish on daily and weekly. So I'll go down to 4 hour, 1 hour to identify shift in market structure. I could even ignore 4 hour, 1 hour, and just go to 15 minutes to be sure there is a shift in market structure on 15 minutes time. So this is what we have on 4 hour. As you can see, 4 hour also is what? Bearish. This is an engulfing pattern on 4 hour time frame. So if I had decided to sell from this point, let's calculate the risk. So you can see that the risk is 85 pips. And I'm not willing to risk more than 60 pips on this trade. So what would I do? I would have to wait for price to pull back. I would have to wait for price to pull back. At least price should do a 50% retracement of this bearish move, this impulse move. Price should do what? A 50% retracement. Okay, so I would have entered maybe at this point. I would have entered sell at this point. And my stop loss will be a few pips above this high. Are you with me? But before I execute the trade here, I need to confirm there's a shift in market structure on lower time frame. It could be 1 hour, it could be 15 minutes time frame. So let's go to 1 hour time frame. Is there a shift in market structure on 1 hour time frame? Is there a shift in market structure on 1 hour time frame? Is there a shift in market structure on 1 hour time frame? There's a shift in market structure at this point on 1 hour time frame. Okay, but let's go down to lower time frame. It will be more clearer on lower time frame. 15 minutes. Let's see. It will be more clearer on 15 minutes. So this is 15 minutes. It will be more clearer on 15 minutes. Okay. So the body should break. I've always said this is the body that should break. I've said this several times. Body should break, not weak. Okay, not weak, the body. Okay, so you can see on 15 minutes, it is very clear. This is the most recent lower high on 15 minutes time frame. You can see why I use this indicator. It makes it very easy to identify the most recent lower high, higher low. That's why I use this indicator. So you can see that the most recent higher low is this on 15 minutes time frame. And if we go down to 1 hour, sorry, go up to 1 hour, 1 hour should close below this before we consider. Now let's calculate the risk here from this point. I'd like to know the range from this point. How many pips? This is about 70 pips. Okay, 70 pips. So we wait for 1 hour to close below. That's okay. So one candle, this is the 1 hour candle that closed or sorry, below that's most recent higher low. And since the risk involved, if we are to take the trade from this point, since the risk involved is more than 50 or 60 pips, we need to wait for price to pull back. Like I said, at least it should do a 50% retracement before we sell. If you are trading lower time frame, maybe 5 minutes, 15 minutes time frame, you definitely would have, most people would have entered this buy. Those are scalpers. Okay, most would have entered buy. Take maybe 10, 15 pips. If you had entered buy from this point, your SL 21 pips would have made maybe 59 pips. But you should know that you are trading against the trend. This is counter trading. Okay, this is counter trading. It's not complicated. That's why you need to join the community. Okay. So as I trade, as I see setups and I share with you guys, it's very important you follow me. It's not something you just master in one class. Okay. It's not something you master in one class. You either have access to the replay, watch it over and over again. Okay. It's not something you might just grasp in one class. That is why mentorship is very important. It is very important. You can't do without it. Okay. Unless you are very experienced, then you don't need mentorship. But if you're a new trader, you are not making profits, you are not profitable, then you should get a mentor. Trust me, you can't do it on your own. You can't. You can't do it on your own. You need a mentor. One of the reasons most traders are struggling in the market is that, the market offers you freedom to do whatever you want to do. So most traders don't have this structured freedom. Why is it that all these institutional traders are profitable? It's because they have structure. You can't do anyhow if you're trading for a firm. You can't over leverage. You can't just apply any lot size on a trade. They force discipline on them. Unlike retail traders, you can do whatever you want to do. If you have $100, you can decide to apply 1.0 lot size, 2.0 lot size on your $100 and you blow the account. That is why many traders are struggling. They are not accountable to someone. And that's one of the reasons I created the community. You have to be accountable to your mentor. But if you decide you want to do it on your own this year, it's fine. At the end of the year, we'll see how far you've gone. Okay? At the end of the year. So I hope this is clear. let's look at more examples. Let me show you more examples on the chart. Okay, we'll start with the weekly. Okay. Okay, let's look at this. Let's look at this. Let's see if this played out. Okay, so here on the weekly time frame, a bearish candlestick formed here, right? This is a bearish pattern on the weekly time frame. Okay, so if we go back here, we'll see there was a support here. Okay, and also we had a fair value gap here. Let me go down to lower time frame. So the fair value gap was created on this is the fair value gap. Okay, let's go back to the weekly. So after the formation of this candle, this is a bearish candle. You would also agree with me that price is at what? Extreme discount. And since price is at extreme discount, it is expected that price pulls back. Are you with me? It is expected that price pulled back. Also, we had liquidity that was residing at this previous low because a lot of retail traders would have executed buy after the formation of this pattern. Stop losses were residing at this low. Sell stop was residing at this low. So what happened? Liquidity got cleared, and also that liquidity area was at a discount area, right? So after the formation of this candle on the weekly time frame, next thing I will do is go down to the next lower time frame, which is daily. If I am able to identify a bullish reversal pattern on a daily time frame, I would work with that. Okay, I would work with that. Though on the weekly time frame, the pattern is not a bullish reversal pattern. But the fact that prices are discounts, liquidity got cleared, fair value gaps got filled, there's a high probability that price will pull back from that level. Even though the long-term trend is still bearish, there is a high probability that what price will pull back from that level. So if I go down to daily time frame and I'm able to identify a bullish reversal pattern on a daily time frame, then I would consider buying. So what pattern do we have here on a daily time frame? It was still bearish. It was still bearish, right? It was still bearish. Now, after the formation of this daily, let's see what we had on 4 hour. I don't want to sell because price is at discount. Are you getting me? I don't want to sell because price is at discount. So let's go down to 4 hour. So can you see the pattern we had on 4 hour time frame after the close of that daily? This is a bullish reversal pattern on a 4 hour time frame. Now, after identifying this on the 4 hour time frame, I need to ensure there's a shift in market structure on the lower time frame. Okay, I need to ensure that there's a shift in market structure on the lower time frame. So we'll go down to 1 hour, 15 minutes time frame. So 1 hour, no shift in market structure. Let's go down to 15 minutes. Okay, so on 15 minutes, shift in market structure. Okay, shift in market structure would occur at this point, right? This is the most recent lower high. Okay, this is the most recent lower high. So what do I do here? I need to calculate the risk, the difference from this level to this level. This is 94 pips. 94 pips. I don't want to wait for price to get to this level before I would buy, right? So I'll go down to 5 minutes. I want to ensure that the difference between the most recent high and the low is what? No more than 60 pips. So since on 5 minutes or 15 minutes, it is more than 60 pips, I'll go down to, now as a swing trader could work with this. Okay, a swing trader could work with this because if he's risking 90 something or close to 100 pips, he could aim for at least 200 pips, 300 pips. This could work for a swing trader. A swing trader, a patient trader could work with this. But as a day trader, I can't work with this. Okay, so let's go down to 5 minutes. 5 minutes is the same level. You can see 5 minutes is the same level. So let's go down to 1 minute. The difference must not be more than 60. Okay, let's go down to 1 minute. 22nd of November, 2024. 22nd of November. I hope we'll be able to view it. 22nd November. Unfortunately, we can't view 22nd November. Can't view that. Okay. Okay, can still go back a few minutes. This on November. I hope we'll be able to view that. This is taking time. Almost there, 22nd November. Okay, so there. Okay, so this is 22nd November. And the most recent lower high, this is it. This is the one I identified on 5 minutes and 15 minutes. But on 1 minute, this is it. This is it on 1 minute. Let me use a different color. So I'll wait for 1 hour candle to close above that high. So let's go back to 1 hour. 1 hour candle should close above that high. So where do we have the first 1 hour candle that closed above that level? This is it. Can you see this? This is the first 1 hour candle that closed above that level. When the market opened on Monday, there was a gap. There was a gap on Sunday. You can see the gap. It's opened above this recent lower high we identified on 1 minute time frame. So let's calculate the risk involved. Remember, the risk must not exceed 60 pips. So if I had bought from this point, what would have been my risk on this trade? You can see 102. 102, and I only want to risk 60 pips on this trade. So what would I have done in this case? I would have waited for price to pull back at least 50% retracement of this move. Okay, so I would have waited for price to at least pull back to this level. So if I said to buy from this point, what will be my risk? let's say I decide to buy it from this point. I think this is 50% retracement. So you can see my risk here will be 54. I can decide to set my SL 60 pips. That's six pips below the low of this candle. And how much would I have made on this trade? At least 1:2. This is 152. I risk 60. I go for 120. At least 120 pips. So I would have made 1 to 2 risk reward on this trade. Are you following? This is simple. What is the candlestick pattern on the higher time frame? Is price at premium or discount level on 4-hour, daily, or weekly time frame? If yes, if it's at premium, you want to sell. If it's at discount, you want to buy. But before you buy, ensure there is a shift in market structure on 15 minutes time frame. Okay, now, like I said, if the difference between the high, the most recent swing high, and the low is more than 60, wait for price to do at least 50% retracement before you execute the trade. This is not complicated now. Higher time frame, what is the candlestick pattern? Is it at discount or premium? Has price just filled a fair value gap at discount or premium level? If that is confirmed, first thing, you confirm the higher time frame, weekly or daily. Okay, candlestick pattern, mark that. Okay. Secondly, is price at discount or premium? Confirm that. Then go to lower time frame. Look for shift in market structure. Ensure that the difference between the most recent high and the low does not exceed 60 pips. If it exceeds 60 pips at the time 1 hour candle closes above that level, wait for price to do at least 50% retracement before you buy or sell. I hope that is clear. I hope that is clear. So I think the last thing I will talk about is the risk management. Risk management. Like I said, you shouldn't risk more than 2%. Now, for those of you who will be trading below $100, you must be willing to risk 50%. Sorry, 5%. 5%. And since your risk is high, your reward also will be high. So someone is trading $100 account and is risking 5%, is likely going to double his account within a very short period of time. It's very possible. Unlike someone who is trading $1,000 and is risking 1 to 2%, his risk is less. So his reward also will be less. Are you getting what I'm saying? It's very easy for you to trade $50 and double $50 in 1 month because you'll be taking high risk on your $5. So for example, if you're trading with $50 and you are trading with this my strategy, you are risking 50 pips, let's say 50 pips on every trade. It means the lot size you would apply will be 0.01. So on every trade you are executing, you will risk $5, right? You will be risking $5. And that $5 is, if I'm correct, that should be 10% of your account, right? That will be 10% of your account. So you can see that the risk is high. The risk is high. So your reward also will be high. But if you have $1,000, $2,000, 1%, 2%, unless you've traded that strategy and you have confidence or you have trust in that strategy that, okay, this strategy has, let's say 60% or 70% winning rate and your risk reward is high, you can now increase your risk. So maybe 3%. You don't just jump from 1% to 5% or from 2% to 5%. You start maybe from 2 to 3, from 3 to 4, then to 5. Okay. So on the risk management, if I'm to risk Let's say my capital is $1,000. Let's say my capital is $1,000. Okay, I don't want to risk more than 2% on a trade. That's being conservative. Okay, that's being conservative. 2%. So every trade I execute I shouldn't lose more than $20. That's 2% of my capital. Okay, I shouldn't lose more than $20. So the risk on the trade is, let's say the risk is, okay, I said maximum 60 pips. It means on every trade, my lot size should not exceed 20 divided 60. 20 divided 60. Let me use the calculator. Please, this year, ensure you apply good risk and money management. Please. Please, don't over leverage this year. I'm begging you. Don't over leverage this year. These are some of the things I want to monitor. I want to supervise. For those who will be joining the community, I want to ensure that you don't over leverage. Every trade you execute, I would ensure that you apply stop loss. So we'll be meeting 2-3 times in a week. I chose Tuesday, Wednesday, Thursday, because those are the most volatile days in the market. We will meet a night before. You tell me your trading plan for the next day, the risk you're going to take, at what level are you going to enter the trade. I want to ensure that you follow your trading plan. Most importantly, that you apply good risk and money management. You have to be disciplined to make money in this market. You have to be very disciplined. Most of you are not disciplined. You don't stick to your trading plan. Okay, so my lot size here will be 0.0. If you divide 20 by 60, that will be 0.3. Then I'll multiply this by 0.1. 0.1 is constant. So my lot size will be 0.03. So every trade I execute, I must not exceed 0.03 lot size. 0.03 lot size. For you to manage risk properly, you need good capital. You need good capital. Okay. Why is it important that you have good capital? Let's go back to GU trade. Let's go back to GU chart. So on this, on this trade, you and I know that everything in trading is probability. At this point, price might not pull back to this level, might not give me the opportunity to join the buy. It might just keep going up. If you have good capital, for example, you could have gone in with, let's say 50%. So let's say the lot size I'm to apply on this trade is 0.04. I could have gone in with 0.02 lot size. Or let's say the risk I'm taking on the trade, okay, is $20. I can decide to risk $10, execute the trade at this point. Yes, I know that price is likely going to pull back. Price is likely going to move from this point and just keep going up. I can decide to risk 50%, which is $10. Buy at this point. Then if price pulls back to this level, I'll go in with the remaining lot size. But if all you have is just $100, you can only take one trade unless you want to risk more. But if you want to stick to your $5 risk on every trade, you can only take one trade, which is 0.01. And you can't even execute the trade from this point. You would have to wait for price to pull back. Because if you enter the trade from this point with your 0.01, you'll be risking 106 pips, which is about $10. And that is like 10% of your trading account. And if you lose 10% of your trading account on a trade, you lose 3 trades in a row, That will be 30%. If you lose 30%, most times you will lose composure. You will lose composure. Anything that makes you lose 40 to 50% of your capital, there's a high probability you blow that account because your psychology will be messed up. That's the time you stop following your trading rules. Are you getting me? That's the time you stop following your trading rules. And before you know it, you blow your account. So you want to ensure that your maximum drawdown, okay, your maximum drawdown on your capital should not exceed 30%. Note that down. Your maximum drawdown. So if you put $100, if you start with $100, anything that makes you lose $30, it's likely you don't know what you're doing. It's likely you don't know what you're doing. So I will always advise that you take a break. If you lose 30% of your capital, take a break, re-strategize. Okay, if possible, you go to demo, trade for some time before you come back live. But if you keep trading that account, trust me, the probability that you blow that account is 70 to 80%. The probability you blow the account is very high. Okay, so see why you need to have good capital. So if you have good capital, you could have gone in here. Then when price pulls back to this level, you're going with more lot size. Are you getting me? So my capital is $1,000. I don't want to raise more than $20. Okay. So my first trade, I could go in with 0.01. Then when price pulls back to my point of interest, I'll go in with 0.02 lot size. I hope you're getting me. Are you still here? Let me take questions. When you identify candlesticks pattern, your discount area, what exactly are we to consider on H4 before going to M15? If you are working with the daily and the candlestick pattern on the daily is bullish, all you need to identify on 4 hours is that the pattern on the 4-hour time frame is also bullish. Then you go down to 15 minutes or 5 minutes time frame or 1 minute time frame. It is the range on those time frames that will determine which of the time frame you work with. Are you getting me? The difference between the high and the low of the range is what will determine. For example, if you go to 15 minutes and the difference is about 200 pips, that risk is too high. Hope you get what I'm saying. You ensure that the risk does not exceed, the difference between the high and the low does not exceed maximum 60 pips. Are you getting me, Mr. Emmanuel? Ensure that it does not exceed 60 pips. So if you go to 15 minutes and you see that where shifting market structure would occur, the difference from the low to that level is above 60 pips. That trade is not for you. You go down to the next lower time frame, 5 minutes. Look at the most recent lower high. Calculate the difference between the most recent lower high or higher low to the low or the high. If it is more than 60, go to 1 minute and work with that. I hope you're getting me. Mr. Emmanuel, I hope that is clear. Any other question? Any other question? You have any other question? Any question? Any question? Any other question, Mr. Elvis, Mr. Peps? Please ask your questions, especially for those of you who wouldn't be joining the community. Ask your questions now, please. This might be the last time you would have access to me. This might be the last time. Please ask all your questions. Please. GJ. What is it you want to know on GJ, Mr. Emmanuel? What is it you want to know on GJ? You want to know the trend for GJ? Is that what you want to know? Okay, GJ bias, okay. So let's start with the weekly. So on the weekly, like I said, if you look at the structure from this point, what is the structure here now? We'll see it clearly on daily from this point. Okay, let's go down to daily. What is the structure on the daily? Okay, let's just confirm the structure. What is the structure? This is a high, low, higher high, lower high. So you would see here that the previous lows is being respected. This tells you that the structure is what? Bullish. And if the structure is bullish, you want to look for buy opportunities. If you apply your trend line, this is a bullish trend line. Okay, the market has been respecting previous lows. That tells you that GJ is in a bullish direction, bullish trend. Okay, so let's go back to the weekly. And also, like I said, you want to be sure price is at a discount or price just filled a fair value gap. So on the weekly, we had a fair value gap here. Can you see it? And what happened after price filled that gap? Was there a rejection from that level? Yes, there was a rejection. So if there was a rejection from that level and we've identified the structure to be a bullish structure, what do I need to do? I need to go down to lower time frame to identify the patterns that formed after price filled that fair value gap on the weekly time frame. So let's see daily. What pattern do we have on a daily? Is it a bullish reversal pattern? So you can see on the daily, Thursday was bearish, Friday was bullish, right? Now on this time frame, we can say this is a bullish reversal pattern. So we'll go down to 4-hour. We should be able to identify a bullish reversal pattern on 4-hour time frame. Okay, so if we're able to identify a bullish reversal pattern on 4-hour time frame, then we might want to consider going bullish on GBP JPY. Okay, so let's go down to 4-hour. So what do we have on 4-hour? Now, if you look at the 4-hour time frame, what can you see on 4-hour here? What can you see on 4-hour? Let's work with the most recent range on 4-hour. Is price at discount? Yes. Right? Price is at discount. And we had a fair value gap here. This is on 4-hour time frame. Okay. What happened there? Price broke out from that fair value gap. And that could be because we had a fair value gap below this one I just identified on 4-hour time frame. Let's confirm that on 1 hour or 15 minutes time frame. Okay, let's confirm that. I'm sure maybe there's a fair value gap below that. That's why price broke out. So this is 1 hour fair value gap. That's from this point to this point. Okay. Let's see 15 minutes. There's a reason price broke out from that. So you can see 15 minutes fair value gap. Can you see it? Or the fair value gap here. And that could be the reason for that breakout from the fair value gap of 4 hour. You can see. Okay, yeah, this is the fair value gap. So let's go down, let's go back to 4 hour. What happened when price filled, after price filled this gap? Can you see? Can you see this? after price filled this gap, what happened? There was a strong rejection. So at the moment, based on this pattern, GJ is bullish. If you are considering selling, then you have to wait for this for price to break out this support. If a 4-hour candle closes below this level, then you could consider selling. But at the moment, GJ is bullish. It is bullish. So GJ is likely going to come fill this fair value gap. Can you see this? Can you see this fair value gap? It's likely going to come and fill this fair value gap before selling. That's my take on GJ. It's likely going to come and fill this fair value gap before selling. Now, after confirming this on 4-hour time frame, we still need to ensure that there's a shift in market structure on lower time frame. Okay, we still need to be sure there's a shift in market structure on lower time frame. So let's go to 1 hour. I've done this before. Okay, so we had an engulfing pattern here on 1 hour. So we need to go down to, let's say, 15 minutes. Okay, on 15 minutes. No shift in market structure on 15 minutes. Shift in market structure would occur at this point on 15 minutes time frame. Let's go down to 5 minutes. Okay. Shift in market structure on 5 minutes would occur at this point. So what's the difference from this point to this point? 150, 160, that risk is too much. So let's go to 1 minute. 2nd of January, okay, 1 minute. So let's see. Okay, so the most recent lower high on 15 minutes time frame. Where is it? Where do we have it? This. So what we would have done is wait for 1 hour to close above this high. So let's calculate the risk here, or the difference from this point. Okay, I want to ensure it does not exceed 60 pips. You can see. You can see. So this is what I would be working with. So you can see here. Price didn't break out from this high. I would have worked with this. If price had cleared this high, I would have worked with this. Here also, I would have worked with this if price had broke out from this high. But all this price didn't break out. 1 hour candle didn't close above these highs. So it was at this point, 1 hour candle closed above that, and that is what I work with. Are you getting me? So let's go to 1 hour. So this is the 1 hour candle that closed above it. Okay, it's closed above it. By the time the 1 hour candle closed above that level, the risk has increased. Okay, so from this point to this point, this is where I'll set my stop loss. The low of this candle, this is 91, 92 pips, and I don't want to risk more than 60 pips. So what would I do? Price needs to pull back. I want to see price do a 50% retracement at least before I would buy. So I would have considered buying from this point. Let's calculate the risk here. 61, that's 60 pips. This is where I would have entered buy on GJ. I hope that is clear, Mr. Emmanuel. So my buyers on GJ this coming week, it's a buy. I would only consider selling if a 4-hour candle closes below this low, this support area, or this fair value gap gets filled. These are the areas I would consider selling. Breakout from this support or at this premium area. This fair value gap needs to be filled. So if you're considering buying your TP, if you're buying from this point, your risk will be high. You might want to wait for price to pull back a little before you buy. Okay, because your risk could be 113, and your profit target, this is where you're going to use as your TP1. This is about 134. The risk reward is very poor. Are you getting me? It is very poor. Unless you wait for price to pull back. Let's see 1 hour. Let's see 15 minutes. So identify a fair value gap. So you might want to wait for a price to, do we have a fair value gap here? I think this gap has been filled. Okay, there was one here. We had one here. You see, price has already tested that fair value gap, but it might still want to come fill this fair value gap. Then we had another one here. This is the most recent fair value gap. We had one here, right? We had one here. This one has been filled. You can see this fair value gap has been filled. This pullback filled this gap. So price might not come back to this area. So wait for price to pull back to this area before you consider buying. And if you buy from this area, let's see the risk involved. The risk is still high, but you can still take it. This will be 90 pips, and you are aiming for 130 pips. 90, 130, that's about 1:1.5. 1:1.5 risk reward, which is not bad. Okay, so that's my take on GJ. Yes, there has to be a shift in market structure, Mr. Manuel. There has to be a shift in market structure on a lower time frame. Wait for the shift in market structure, identify it, then wait for 1 hour candle to close above that shift in market structure, that high, before you buy. I hope that is clear. But, I think I've done my best, Mr. Joseph. I think I've done my best. That's a good price. Okay, that's a good price. So, in the absence of questions, I think that will be all for tonight's session. I think I've covered everything. If there's any area you want me to speak on, please let me know. Let me know. If there's any area you want me to speak on, please let me know. For lunch, I can see you. Evening. Any question, Victory? Let me know. If you want me to unmute you, let me know. So what are we going to be doing in the community? We'll be analyzing the market together. Okay, we'll be executing trades together. Okay. We'll be getting trade signals, trade calls, okay? I'll also be coming on YouTube. I think on Tuesday, Wednesday, Thursday. I'll still be coming on YouTube. So for those of you who can't afford mentorship, we'll meet on YouTube at least 2 times in a week. 2 times in a week, okay? You just make payment. Once you make payment, you will be added to the group. Please, if you're joining the community, you must show up for classes, please. You must be available for the classes. And you are not just coming to the classes to hear me talk. Those sessions we'll be having on a weekly basis. You have to come and share your analysis with us. Share your ideas with us. If you make new discoveries, you come and share those discoveries with us. You're not just coming to class to hear me talk. No, that's not the way to grow. When you come for class, you must contribute. You must have something to say. Not till you come to class. Anything I say is yes, yes, no. Those are not the type of traders I want to build. Okay? You have to be fully involved. You have to participate. Okay? So please, I'm not accepting everyone into the community. You know you will not be showing up for those classes. Please don't join. If we are to meet 10 times in a month and you only show up 3 times or 2 times, I will remove you from the group. I don't care if you even pay me. I will remove you from the community. And if you are the type that will not stick to your trading rules, I will remove you from the community. If you break your rules 2, 3 times, I will remove you from the group. Please, I want serious-minded people. Okay? I want serious-minded people. I don't just want to collect money and you are not getting value. You are not growing. I don't want such people, please. You must be willing to learn and also contribute. Okay? So please, it's not about just paying. You have to be involved. You have to participate. Okay? You have to. Please, not be about just paying. No, please. I don't want people would not be serious. If you wouldn't be serious, please, just keep your money. Use your money for other things, please. Please. Just request for I believe you have my number, request for the account number. Let me just drop it on the chat. Just make the payment. After making the payments, you send me a message on WhatsApp, send the receipt on WhatsApp, then I will add you to the group. For those of you that have paid, don't worry, I will add you to the group. Okay. Some persons have already paid. I will add you to the group. Before, like I said, we'll start trading 15th. Okay, that's when I'll be launching the community, 15th of January. Okay, so that's the details. Okay, and I think I would only, for this month of January, I'm going to accommodate just 10 persons. Just 10 persons. I don't want too many people. Just 10 persons. Okay, just 10 persons. Yes, I'll make it available. I'll make it available. Okay. I'll make it available, Mr. Emmanuel. Okay, the replay will be available. If not tonight, tomorrow. I'll make it available tomorrow latest. Okay, any question? Any question? So from 15th of January, I wouldn't be active on existing groups. I wouldn't be active on existing groups. I'll be giving more attention to the new community. Okay? Any question, any question, any question? Any question, any question? For launch, do you have any question? Mr. Emmanuel, any question? Mr. Makiwa, any question? Mr. Joseph, any question? Mr. Raf, any question? Any question, any question? It is just 30,000 naira for 3 months. Just 30,000. So you're just paying like just 10,000 naira every month. That's not too much. 10,000 naira every month. It's very cheap. It's affordable. 10,000 naira every month. 3 months, 30,000. Some of you, if you carry your babe, go fast food restaurant, you'll spend more than that. This Christmas, New Year celebration, most of you spent more than 30,000 on just flexing. When it comes to acquiring knowledge, 30,000 becomes very expensive. It becomes very expensive. But when it comes to grooming, 30K na change. So I don't think 30K is too much. I know what others charge for mentorship. I know. I've paid for some. I've paid for some. 80,000, 90,000. And after having paying them, they just add you to a Telegram group, no weekly classes. They just add you to the group. You have to find your way. You just collect the money. I've paid several. Paid several. Okay. So I think that will be all for tonight's session since there are no questions. So I appreciate you all for your participation. It's my greatest desire that you all excel in your trading business. If you follow the rules of trading, which is one of them is applying good risk and money management. Okay, which that's very key. You need to apply good risk and money management. You have to be disciplined. Don't over leverage. If you do that, and you need to have a strategy. Most of you don't have a strategy. You don't have, your strategy is not well defined. Your strategy is not well defined. That is why you are still struggling in the market. That's why you're still struggling in the market. Your strategy is not well defined. Okay. If you have your own strategy, you can join the community. If your strategy needs to be modified, I would help you work on it. I would help you work on it. It's not a must that you trade my strategy. It's not a must that you trade my strategy. So when you join the community, you share your strategy with me. I will tell you what needs to be fixed to make that your strategy a good strategy. It's not a must that you trade my strategy. Okay? It's not a must. I can help you modify your strategy. I can look at your strategy or your trading performance and I'll tell you where the problem is, what you need to fix. So it's not just about coming to learn my own strategy. I would help you fix your own strategy. Amen. Amen. So that will be all. So like I said, the replay will be available tomorrow latest. I'll try make it available tonight. I will try. This is to 12. Okay. Your, what's it called? Your history, trading history should, at least with that, you should know the win rate of your strategy. Okay. Your trading performance should tell you the win rate. And what of people that don't have strategy? I don't understand your question. You will learn how to use my strategy now. Okay. You will learn how to use my strategy if you don't have a strategy. You learn how to use my own strategy. I hope that answered the question. Well, I'm sure. For those who will also be joining the community, I'll be sharing some other ways in which you can use to make money with your trading skill. Okay, I'll be sharing some other businesses you can do to earn extra income. Because if you are hoping to make good money with your $100 or $50, you'll be taking a very high risk. So you should look for other ways to earn as a Forex trader. I will share that with you guys, okay, in the community. Okay, you want to be unmuted. Okay, let me unmute you. 3 minutes. Okay, you can unmute your mic.
Yeah, good evening, sir.
Evening, Follow Show.
Yeah, thank you for the class.
You're welcome.
Right. So you said for the mentorship that it is 30K for 3 months.
For those in the mastermind. For those in the mastermind group, they know themselves.
Is mastermind different from the community?
It's different from mass trading community. Yeah, it's different.
What's the difference?
What?
I said, what's the difference?
The mastermind?
Yes.
Those people paid for, they paid for mentorship.
Okay.
They paid for mentorship, like I think 6 months ago.
Okay. And what about Max
What?
trading community? What about Max trading community?
That's a general group.
Okay.
That's a general group.
Okay. So how much is it for mastermind?
For to join the new community, right?
To join the mastermind, like the mastermind.
Those in the mastermind also would have to pay to join the new community. So they would pay 30,000. Those that are
Okay.
not in the mastermind group, if you're in the general group, you pay 50,000 for 3 months mentorship.
Okay.
Okay.
Okay. But I feel there should be a room for like a lifetime payment.
Lifetime payments. Okay. I've done that in the past. It didn't work. People that pay you 2000 and maybe 2020,
Okay.
they wouldn't show up for class. After 2 or 3 years, they will come back and tell you they don't have the time to learn. And because you promise them lifetime, they don't want to pay.
Okay.
Do you get it? So the lifetime does not work. It does not work. Do you get
Well,
it?
I get it though. But yeah,
Uh-huh.
sure, I do.
If you follow me three
I
months, what's 3 months, 6 months? You should have understood the market. You should be able to trade yourself. 3 months, 6 months. If after 6 months of following me, you don't know what you are doing, then you shouldn't be trading. The forex trading is not for you.
Yeah, I feel the major problem is number one, capital, and number two, ability of a trader to be consistently profitable.
If after 6 months,
Yes.
if you follow me in 6 months and you are not profitable, you are still confused, ah, then I don't think forex trading is for you. That's just the truth. If in 6 months of following me, you still don't know what you are doing, then you should look for something else to do. Trading is not for you.
That person should leave trading. And
It's
you
not that. It's not for you. I don't want that person to stay with me after 6 months. Maybe he needs to go and look for another mentor. Maybe my trading style does not fit that person. Then he needs to go and look for another mentor.
and and you said something that I actually took note of. You said as a trader, if you know what you are doing, that you're not supposed to lose more than 30% of your capital. Can you hear me, sir? Mm.
Can you hear me now?
Yeah, sure, you can.
Sorry for that break. It was due to poor network. You shouldn't risk more than 30%. So if you have 1,000, if you're starting this year with $1,000, you
Okay,
shouldn't risk more than $300
okay.
for the year. You shouldn't
Like
risk.
throughout the whole
The
year.
maximum drawdown, yes, should be 30%. If you lose 30%, stop trading
Okay,
before you blow the account.
if it's 30% for a whole year, what about a month?
In a month,
Yes,
if you don't risk more than, let's say, 5 to 10%,
in a month.
there's no way in a month you losing, you lose 30% now. By the time you do your plus or minus at the end of the month, maybe your drawdown will be 5% or 10%. And it's not every month you would have drawdown. Some
Yeah,
months
sure.
you will be in profit. Yes, but you just have to ensure that you don't lose more than 30%. You get what I'm saying?
Yeah, sure, I understand.
So you're not going to lose 10% this month, next month 10%, or just lose all the 20% in 1 month or 30% in 1 month.
All right, so I
Get me?
understand. Yeah,
So
sure.
let's say you have $100, you are risking five. For those of you trading $100, your risk maximum drawdown will be around $50. That's like 50% of your account. If you are trading with $100, you cannot work with that
That one
30%.
that one is
Yes, you
massive.
have to work with $50. So if you're risking $500 on every trade, you have 2 weeks to trade on that account. 2 weeks, $500. That's, am I correct? Yes,
Yeah,
5
sure,
times
sure.
10. So every day you take just one trade per day, one trade per day. After 10 days, you review your performance. Do you get it?
Yeah, sure, I do.
So you don't just more than 30%. You should be thinking of getting
Yeah,
investors in the future. Are you getting me?
yeah, sure,
We're
I'm
thinking of
listening.
getting investors in the future, and most investors wouldn't want to lose more than that.
In a year.
Yeah, in a year. They wouldn't want to lose more than 30%.
Yeah,
30%.
yeah.
So if someone
That's
gives you
okay
$1,000, you have to trade with $300.
for the year.
That's the risk, yes. And since the person is willing to take 30% risk, your target for the year should be between 50 to 60 pips. That's like one ratio, 1.5 to 2 risk reward. So it depends on the investors. You have those who are aggressive, who are willing to take high risk, and you have those who are
We
willing
have
to
the
take
conservative
low
one.
risk. So high risk, high reward, low
Low
risk,
risk,
low
low
reward.
reward. Right. I don't actually have problem with that. Yeah. But then I think we've talked about this before. The issue of the building equity through profits.
Prop firms.
Yeah,
Prop
because
firms
I
of
think,
this that we have nowadays, I don't trust them. I
but
don't
then,
trust them.
but then I believe people actually cashing out from profits. Like people actually making money from it.
The pressure you get from trading prop firm is too high. It's too high. There's a
Okay,
probability you blow the
the account.
account.
Okay,
Yes, there's that probability. That's why I don't recommend prop firm. I traded prop firm now. I cashed out from prop firms.
okay,
I don't recommend them. Most of them out there are just scams. I made so
okay
much
now.
money from prop firm. I started with my forex fund,
Okay,
cash out from my forex fund. Then also I did consummate. Before consummate crashed, I still did
okay,
some cash out from consummate before they crashed. I still had my account with them before they
okay.
crashed. So most of these
But then,
prop firms are just scams.
okay now.
And it
If
won't make
if
sense after spending much time to hit the target. Sometimes it will take you like 2 months or 3 months to pass phase one and phase two. And when it's
okay,
time to give you live accounts, they start telling you stories. And sometimes they will give you the live account when it's time to make withdrawal. They start telling you stories.
okay now. The major question now is someone with the low capital. Like how does the person build capital
Someone with what?
with low capital?
One sure way to get more capital. First, like I said, be very good at trading. If you are very
Okay,
good at trading, if you have track record, at least 6 months track record, you can get investors. At least 6 months track
okay,
record, you can get investors. Okay, that's one way you can use to
okay,
scale up. Okay, or you offer copy trading. Okay, you
okay,
offer copy trading. You register with a broker, then get people to follow you to copy your trade, and you get commission from whatever profit you make on the account. Okay,
okay.
so that's the only two ways I know that you can scale up as a trader. And if you are fortunate, you could get a job, maybe with one of the financial institutions, maybe a bank, hedge fund, or prop firms. You know, we have physical prop firms, not just online prop firms that we have all over the place. We have physical prop firms that employ experienced traders.
Yeah, yeah,
So
in
if you get
Nigeria.
that kind of, no, 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 I don't know any in Nigeria.
Okay.
I don't know any in Nigeria. You have in UK, you have in US, you have in other countries. So if you have tracker, you don't have to be there to trade for them.
Okay, you
I
can
don't think
trade
you have to be there.
remotely.
Yes, if you have track record and you pass their interview, well, you need to have that track record. You pass their interview, they could offer you that opportunity. For those of you that are still very young, I think you can still leverage on that. But you have to be very good at trading to take advantage of such opportunity. For people like us now, we're not thinking of working for those firms. I only consult. You get what I'm saying?
Okay, consultant.
I only consult, yes. Okay.
Okay, okay now. So
Because I'm
now
sure
within
if there are conditions when it comes to age brackets, I think I've passed that phase.
that
Those
age
of you that
bracket.
are still young, yes, you can still take advantage of those opportunities.
Okay now.
Okay.
If you have to be realistic within a year, I mean like from January to December.
I didn't hear you.
Can you hear me?
Yeah.
Okay. I said if you have to be realistic from January to December, is there a blueprint to follow or something like a guideline to ensure a newbie now, or probably not a newbie, but someone with low funds. So is there a blueprint or guideline to follow to make at least, being realistic, to make at least 1K to 3K dollars within a year?
To make what?
1K dollars to 3K dollars within a year.
What do you want to start with?
Probably
What's
let's say
capital?
probably $500.
And you want to make 1K.
We probably want like 1K to 3K.
That's just how many percent? How many percent would you have to make? Between 100 to 200. Okay.
Okay.
But if you start with 500 and you're able to grow that 500 in 6 months, let's say you will make 30% to 40%, or let's say
Okay.
50% in 6 months, you
Okay.
could get investors now. Or you do copy trading, and in 1 year you can make more than $3,000. So what you have is $500. You use other people's money to make money. You have the
Yes,
skill.
sir.
They bring their money. You can even make more than that.
All right then.
Okay.
Yes, sir. Because the the capital is the major is the major thing. I mean, it's the, it's the major because
I
sometimes.
showed you guys trading performance now. Previous class we had. Let me see if I have it on this. Okay.